100 subscribers, but I had not dropped a video. People were saying a lot of things, but I'd like to apologize. I was really having some programs. I had some commitments, and I could not bring the video in good time. But nonetheless, guys, as soon as I got some time, I had to make this video for you because I'm a man of my word and I keep my promise. I always fulfill my promises. Now, I'd like to say thanks, guys, for the subscriptions. We've hit 250 plus. Let's keep them coming. Remember, if you're new, hit the subscribe button, hit that notification bell so that you can get notified every time that I drop a new video. Hit the like button if you like the video, of course, and drop your comment in the comment section so we can get interacting. This video, guys, is under a group of videos which are under the Ichimoku. Okay, I have a series called the best of the Ichimoku. We are going to exploit the Ichimoku. Now I've picked the top 3 best strategies under the Ichimoku, and I am going to reveal them one after the other. So this is the first one. Now listen, guys, I have saved the best for last. There is a more fire, more proper, more hot video that is coming. It's one of my favorite videos. One of my favorite strategy under the Ichimoku. In fact, my favorite strategy under the Ichimoku. I'll reveal it after this and after the next video. So maybe in the next 2-3 uploads, 2-3 videos, I'll review that video. So if you are new, come on. There's good stuff coming here. There's good things that is gonna happen here. We are giving you free information, guys. Hit that subscribe button. Let's get interacting. Now without further ado, let's get down to business. Now I had uploaded a video now for this strategy. This is not the first video I'm uploading. I uploaded another one, but after like 30 minutes I got notified that the volume was really poor. It was really low after like 13-15 minutes, and people could not get what I was explaining. So I considered it to be of no use to upload a video with half of it which is silent, you know what I mean? So I quickly did another video so that I can still live up to my words. Now as you can see on my screen, guys, I have already set up my apparatus, my indicators, and I'm going to show you. I'm not going to delete them, but I'm just going to show you how to set them up. So quickly, I'll be really fast, guys. Hope you can catch me. Hope you'll be catching up. You can see my battery is very low, so I don't want a situation where my phone goes off and I wait for another day to do this video. So yeah, I'll be really fast, really quick, but I'll be precise. I'll be on point, so just follow along. Now you go to your indicator window, hit Ichimoku. Right now I will advise you to pause the video, take a screenshot, and continue watching. Okay, so if you've taken the screenshot, good. I won't explain these one by one. I will do them in another video where I will explain what they mean, what they do, what they represent on the chart. But for now, just do what I've done, what you are seeing me. If you want to copy everything, just make sure you copy even the colors. You can put the same colors that I've put. If you want red, if you're okay with red, put red. But where on the Tekken sen and the Kijun sen, if you're putting red, make sure both of them are red. If you're putting blue, make sure both of them are blue. If it's black, both of them have to be black. Now on the up Kumo and the down Kumo and the Kichu span, make sure if you have a white background like me, make sure that yours also is white. The up Kumo, down Kumo, and Chico span, make sure that they are also white. If you have a black background, make sure that the up Kumo, down Kumo, and the Chico span are black. Okay, then you click done. Then you go back and then you go to the stochastic. Okay, we set up the stochastic. This is the perimeters. These are the perimeters of the stochastic. Just the way I've done them, that's the way you should do them. Don't do your own thing, guys. On styles, on main and signal, once you see on styles, if your background is white, just put the color white. If your background is black, make the styles color black as well. The rest, leave them the way they are. Do them the way I have done them. Then you click done. Then you come back, and this time around you click on indicator window 1. Under indicator window 1, once it opens, you put the Ichimoku. Again, the way you did on the main chart is the way you're gonna do it on indicator window 1. Same perimeters, same setups, everything the same. Sorry, this is supposed to be 1 pixel. Yeah, everything the same. Remember, again, if you have a white background, just do what I've done. If you have a background, just change the colors on the up Como, down Como, and the Chico span. Then you click done. There's one thing that I didn't show you. On the stochastic, guys, on the stock, there are levels. You put level 80, level 20, and level 50 in whatever order, it does not matter. Level 80, level 20, level 50. Style, any style of your choice. Color, any color of your choice. And then you go back and click done. Then once you're done, you should have something like this. We should have the stochastic as your indicator window 1 and your main chart, and you should have this blue line, which is the Kijun line, and the blue line also on the stochastic, which is also the Kijun line. Good. Now, what is the first thing that you have to know before we start anything? I want you to pay very good attention to this instruction, guys, because once you miss this instruction, then basically this strategy is of no use for you. Okay, so get this instruction very, very clearly and correct. Listen, your MT5, my MT5, every MT5 out there has got 5. I'm talking about mobile, okay? I'm not really sure about the PC version, but for the MT5 mobile versions, Android, iOS, they have 5 zoom levels. Okay, let me show you what I mean. They have 5 zoom levels. So for this strategy to work effectively, we are going to set it up in the 4th level of zoom, in the 4th level of zoom, or in the 4th zoom in level. What do I mean? If you pinch your screen inwards, okay, what happens is that this is what you're going to see. They're going to get really small. Okay, that's the first level of zoom. Now, if you pinch it outwards once, this is the 2nd level of zoom. If you pinch it again once, this is the 3rd level of zoom. You pinch it again, that's the 4th level of zoom. You pinch it again, that's the 5th level of zoom. Now, what we want is just this one, the 4th level of zoom. This is where we are going to be doing our trading from. Now, what should you look out for? Make sure, let me just clarify this. This strategy works effectively for Crash 500 and for Boom 500. It works for Boom 1000 and for Crash 1000, but not as effective as the 500 indices. Get this clear. This strategy works more effectively for Boom 500 and for Crash 500. It works for Boom 1000 and for Crash 1000, but not as effective as the 500 indices. So the decision is yours. Okay? For me, I mostly stick to Boom 500 and to Crash 500. But when I see an opportunity in Boom 1000 or in Crash 1000, which I feel like my conditions have been met successfully and everything is satisfying, I go for the trade. So the decision is yours. What are the things that you should look out for when you're trading with this strategy? 1, you don't trade when the market is consolidating. Better you stay away from the market. When the market is in consolidation, do not trade. Number 2, be careful with long stretch. A long stretch will show you if the market is in a long stretch, which will result in a long trend. It will show you signs that is turning or changing direction, whilst it's just retracing. When the market is retracing in a long stretch or in a long trend, it will show you signs that your conditions have been made to enter the market, whilst those are false signs. So you have to be careful. If I were you, I would do some, get to understand things like divergence, hidden divergence and regular divergence, because those things, they will really work for you. They will help you to understand that, okay, the market is continuing in this direction, or the market is showing me signs that it's gonna change direction. So if you understand that the regular hidden divergence will show you that the market is continuing with this in the same direction or taking the same trend, whilst a regular divergence will show you that market is about to take a turn. So those are some of the things that on your spare time get to know, get to understand them. It will, if you can add that knowledge together with this strategy, you're going to be more and more successful. The other thing that you can add, and not that you can, but that you should always add, not only for this strategy but whenever you're trading, is risk management, time management, and money management. These three are very important. No strategy is 100%. No one should ever lie to you or cheat you that there's a 100% strategy. No strategy is 100%. But if you apply proper risk management, proper time management, proper money management, proper price action, stuff like that, you see that you become more and more profitable. Seek knowledge before you can seek the cash, guys. That's the rule. So let's get down to business. How are we going to enter, and when are we going to enter, and when are we not going to enter? Let's go on the chart now. Now look at this. Let's focus on the Kijun-sen line, which is the blue line on the stochastic. Let's follow this line. I'm talking about this line, guys. Let's follow this line, where it's coming from. You see this? Let's follow it. Boom. Let's focus here where I've highlighted yellow. What has happened here? This Kijun-sen line has hit the AET level. It has hit the level AET. What is the level AET? Remember, we are in crash 500. What is level AET? Level AET is an overbought level. So meaning that it has reached a level where the highest level of buying, where buyers have over flooded the market. So what happens when the market is in an overbought zone? The chances that it is going to start selling, because now many buyers are going to be exiting, knowing that we've reached an overbought zone, and sellers are going to enter the market. So what is happening here? It's showing us that market has reached an overbought zone. So what is going to happen what happens when market reaches an overbought zone? Mostly it is that sellers are going to enter and the market is going to start selling. So once we see this Kijun-sen, this blue line hitting the AET, what do? We shift our attention to the Kijun-sen line on the main chart, this blue line on the main chart. So remember, this is our first condition. Our first condition is that this blue line on the stochastic should hit the AET. Okay, I'm not saying it should cross. Sometimes it can just hit it and bounce. Sometimes it can be close, very near. Sometimes it can cross. So it's up to you according to your analysis of the market. So once that condition has been met, we move our attention to the main chart. We start following this line. What are we looking for from this line? What signal do we need? What conditions do we need? What conditions are supposed to be met for us to enter the market? The conditions that we are looking for, or the condition that we want now from this from the main chart, from the blue line on the main chart, is that it should come into contact with the market. It should touch the market. It should cross the market. It should cross the price. This is what we want. So let's follow it. If you follow it from down there, you see here it's moving, it's moving, it's moving. Here it crossed, but there was a spike, so we can't enter here because this happened in a second, even less than a second. So it's impossible for you to enter here. But here, if you can see, there is a wick on this candle, meaning that we could have entered here. What happened? A spike happened. What happened here? We could have entered. This candle also has a wick, meaning that it opened as a green candle and closed as a red candle. So what could have happened? We could have entered here and the spike would have happened. Same with this one here, we could have entered, spike would have happened. Same here, we could have entered. But what about here? In fact, here, we were not even supposed to enter. Okay, this is what happened. Okay, There is, look at this. Look at this, guys. Look at this. There is sorry, pardon me, excuse me, pardon me for that. All right, let me just go back where we were. I think I long pressed on the screen. Somebody was talking to me. Okay, I think we were here. Yeah, so look at this, guys. What I was trying to say is this. Once I was talking about we enter, okay, yeah, let's say we enter here. We could have entered here. We could have entered here. We could have taken profit. We could have entered. Okay, yeah, I was talking about entering here. Before we enter here, we were supposed to take a look at something. I wanted us to take a look at something. We wanted us to take a look at this line now. The key you're saying on the stock. We see its movement. If you see its movement, what has happened? It has hit the 80. Oh, sorry, it has hit the 20. Now, when this line hits the 20, what does that signify? When it hits the 20, what does that signify? It signifies that we have now reached an oversold zone. Okay, we have now reached an oversold zone. Now what happens when we hit an oversold zone? Remember we are trading crash, so if we are trading in crash, we are only going to be selling. So if we hit an oversold zone, it means that it is useless, or it doesn't make sense, or it is suicidal for you to continue selling in an oversold zone. So once we hit an oversold zone, we have to leave the market. We don't have to make any entries or any trades. We just have to wait, observe, and analyze. Okay, so once we saw this line, this blue line coming here, boom, hitting the 20 day, we've seen that. With this spike, we were not supposed to enter nowhere. Nowhere now. We have to wait. We have to wait. What are we waiting for? We are waiting for the market to hit the 80 again. Now look at this. Look at this here. Look at this. Market is consolidating. It doesn't know where to go. It's retracing. It hits here. It goes back. It hits here, it comes down. You see, this is consolidation. Very risky to enter. You have to be very careful. Once you notice it, do not enter the market. Just stay put. Now look at this here. Market has what? The Kijun Sen line has hit the 80 here, where I've highlighted. If you had entered here, look at this, guys. Let me just highlight this with an arrow. Here we've hit the 80. That's a sign. We've reached an overbought zone. Okay, so we can sell. Okay, so we wait for our first condition. What is our condition? The blue line now. So this line has got to touch the market, has got to cross the market, has got to cross the price. Okay, it has hit here. Let's enter. We've entered here. What follows up? Look at that. Good spike. We could have gotten profit from there. Okay. See here, we have not yet touched the 20. We are close. If we had entered here, what could have happened? We could have caught this price with this spike. If we had entered here, we could have what? Caught this spike. We're not gonna enter here. Why? Because at this point, let's look at this. At this point, why we're not gonna enter here, if you can see, we have hit the 80. Oh, sorry, we have hit the 20. We have hit the 20 here. So this trade, it was gonna be suicidal if we had entered here. Let's continue. Let's see. This is crash 500. Remember, we are in crash 500. Look at this. We have hit the 80 again. Okay, what's next? We go to the main chart. Once we hit the 80, our focus goes to the main chart. Look, let's enter here. Our conditions have been made. We could have stayed there. Look, we could have caught this one and this one. Let's enter here. What could have happened? We could have caught this spike. What about here? What could have happened if we had entered? No, we were not going to enter there, because if you look at the Kijun Sen line on the stock, it has hit the 20. So it's telling you, stop, don't do nothing, wait for the conditions to be met again. Okay, guys, this thing keeps on repeating itself. Look at this. You hit here again. We've hit 80. We've hit the 80. Then we move our focus to the main chart. Look, we could have missed this because our conditions are not met here. We can't enter here. Our conditions still are not met. You've seen? but here our conditions are made. Let me just say here, we could have entered there. Seen? We could have caught this spike. We could have entered here. We could have caught this spike. We can't enter here. Why? Because you can see that here this line is here, has hit the 20. So guys, this thing keeps on repeating itself. If you understand the nature of boom and crash, how it moves, how it trends, seen here, our conditions have been made. Let's move our focus to the main chart. Look, if we had entered there, we could have caught this long spike. What about here? Since you say that somebody asked me, since you say that whenever the blue line touches the market, we have to enter. What if we entered here? Look at all this. Huh? Well, your answer is that we cannot enter there because of this. This Cajun sand line has hit the 20. So it's telling us that market has reached an oversold zone. We cannot continue selling. Okay. This thing, guys, it keeps on repeating itself. It keeps on. Let me show you in boom 500. Okay, let's see what we have here. Look at this. This is boom 500. My battery is very low. Look, conditions have been made here. So since it's boom, we are just buying now. We are buying. Look, conditions were made there. Look here, we could have caught the spike if we had entered just here. If we had entered here, look, we could have caught this spike and that one. We were not gonna enter here. Why? Because look, it's showing us here that market has reached, the price has reached an overbought zone. So we were not gonna trade there. We're gonna wait. You've seen that? Even if spikes is showing, spikes are going, but if it shows you that it had hit the 80, don't enter. You've seen here, we've hit, it showed us that we've hit the overbought, yet it's still going up. So don't just follow this the conditions. Hits overbought, don't in boom, don't trade. It hits oversold in crash, don't trade. Wait for the conditions. So we could have waited, we could have missed all this. It's okay. Better you are not trading, you are watching the market rather than you enter and you come you lose your money. Now you've seen here, we're gonna wait here. Conditions have been sorry, we are in an overbought zone, so we're waiting for it to go into an oversold zone. Let's see if the other yep, see this. Conditions have been made here. Look, conditions have been made here. What happens? Look what follows. Wow, my battery is really low. Look what follows. Hope you guys can see this. Look what follows. Look what follows. Look what follows here. Look, we have not yet hit the 80. Look what follows if you had entered there. Look what follows. Where are we hitting the 80? Sorry, we are hitting the 80 here. So this was not going to be made. This was going to be our last entry, because if you can see here, we have hit the 80 here. Sorry for the backlight, guys. There's a dim in backlight. My battery is like at 5, so I'm trying to be quick so that we can finish in good time and upload this video. A lot of people have been waiting. So basically this thing, guys, it keeps on repeating itself. If you just pay good attention, you will see this thing over and over. See this again here, it happened. If you've seen, it's every time this thing keeps on happening. So if you just look at it here, it happened. You could have caught these spikes. Look at this, everything here, you could have caught it. You could have caught all of them here. You could have caught here. You could have caught this too. Here you could have caught this long one, this one. This thing, guys, it keeps on repeating itself. This is the nature of boom and crash. You've seen here again. Look at this. Look at this there. Look at this there. You could have caught this too. Okay, this is boom and crash. This is boom and crash. I'm in boom 500 right now. Look at this, guys. This is so easy, man. Once you master this strategy, guys, look at this. You could have got this, got that. Imagine if you held this trade. Imagine if you held this trade, guys. Look. So you couldn't have entered there, because here, if you see, sorry, let me turn my arrow. See here, we have hit the 80. So we were not gonna go beyond this. This was gonna be our last spike. We were not gonna go beyond this spike. Even if market continues to go up, because our indicators are telling us don't, we are not going to go any further. So my battery is gonna go, my phone is gonna go off anytime. Let me show you the last one. Look at this one. Here our conditions have been met. Look at the main chart. What happens? Look, all of this. You could have caught all of that. Wait, it hits, you catch it. Very easy, very direct. Look, here the market has not yet hit the 80. You could have entered there. You could have caught this long one. But here at this point, you see, market has reached 80. So we were not going to enter here because market has touched the 80. Guys, just like I say, try it in your demo. See how it works. Get comfortable, get familiar with it. Then you can try it in your real account. Follow the instructions. Follow the conditions. Follow the rules for this strategy. And trust me, you will testify. Drop the comments of your experience with this strategy, both in your demo and in your live accounts. Let me know how it goes. Let everybody know how it goes. Let's get interacting. It's your boy Mark Dash. I gotta go. Remember, guys, we dropping hot videos this coming week. We are finishing the Ichimoku series. We are exploiting all the best indicators, the top 3 indicators under the Ichimoku. From there, we are going to do the moving averages, the best of the moving averages, and the best of the other indicators. Okay, remember, we have to get information before you get cash. For example, guys, do you know that the moving average is the most accurate indicator of all the indicators? Did you know that? Well, you did not know. I just told you. Wait for the series, for the moving average, the best of the moving average series. I'll review a lot of things about the moving average and what you didn't know. So hit the subscribe button if you're new. Tell somebody about this channel. Let them come. Let them share the links for the videos. Let them come. Let them also subscribe so that they can also get first-hand information. It's your boy Mark Dash. Let's get interacting. Remember, stay safe and stay home. No, stay home and stay safe. I'm out, and